Good afternoon, everyone, and welcome to today's AMD weekly webinar. Today's topic, we're going to be discussing helping real estate investors with non-QM loans. I'm your host, Carl Holman, Communications Manager here at AMD Mortgage. We'll review the ground rules real quickly for those folks who are watching us live on YouTube, Facebook, LinkedIn, and non-QM Exchange. Be sure to like and subscribe to our channels whenever you have an opportunity to. I will go to the next slide. Let me share my screen. And, all right. All right. So for those of you who are watching us live on our social media platforms, if you've got questions, go ahead and put them in the comment sections, or and it'll aggregate into the system that we're using to stream, and we'll be able to show and answer them as we go along through today's discussion, which, of course, today, again, we're going to be talking about investment loans that AMD offers. I'll introduce our speaker in just a second, and then we'll talk about all the various loan products that we have to offer, particularly in this market when prices are high and people need higher balance loans. So with that, let me introduce our speaker, Ms. Carla Biancanello, and she will be joining us right now. Carla, there you are.
Hello, everybody.
Welcome to today's discussion, Carla. I'm glad you're always a very knowledgeable person when it comes to non-QMs. You're one of our top producers. You've been with the company for more years than we will tell. But Carla is one of the most astute account executives we have. She is the originator of fancy financing. Sorry, I'll let you explain what that is. But for those people who aren't familiar with AMD Mortgage, why don't you take a minute to just tell people a little bit about us?
Sure. Welcome, everybody, and thanks for listening. We are a direct mortgage lender focusing on non-QM, and we also offer a wide range of products, conventional, FHA as well. And we do have a small little commercial portion of our programs and guidelines, which is Imperial Fund, which allows for some investment, small commercial mortgages as well. AMD has been around since 2005, so you are aware of footprint across the states. As he puts up the slide now, you'll see we're in about 40 plus states. And some of those states we do allow for investment purpose only loans. So if you're a mortgage broker out there and you're listening to us and you're not licensed in a state, but you have an investment property in that state, we do allow investment purpose only loans across all the states, whether you're licensed or not, as long as we are licensed there. So that's the little differentiation you'll see at the bottom of this footprint. And on our rates and matrices, it also shows which states allows for no license required.
Great. Okay, so now that we've kind of talked about sort of at a high level where we are, what we do, let's dig into today's topic, which is investment loans, and particularly the non-QM loan options that we have available to them. So let me go to the next slide, and
Perfect.
I will I know we break it down by different things like alternative incomes, residency, and short term, but why don't you tell us a little bit about each of these?
Sure. So non-QM, again, is our main focus and our specialty. And what I'm going to tell you here on this first slide are just the most popular programs that everybody's familiar with out there, and then also the niche products that we offer and what will differentiate us as well. So just quickly to run down here, full income non-QM. Sometimes people will say, why would I send you a full income loan? Because the thought process with non-QM is always alternative lending or alternative documents for income. For an example, though, if you have a full income borrower that was going conventional, Fannie or Freddie, and it is the AUS or LP is not passing, we can take that loan in the doors, because obviously with non-QM loans, there are no AUS or LP that is run or required. And if it's an investment property, we will allow investment properties to close in an LLC. So that is another reason for a conventional mortgage falling out, let's say, that may want to go non-QM, and or the bankruptcy and foreclosure minimum requirement of years to be out of it. We in non-QM only require you with a recent credit event, such as a foreclosure or a bankruptcy or a short sale or a modification, you are only required to be out of it for 2 years. We can go as little as 1 year out as well. It just gets bumped down to the next program. So that's a good example of a full income non-QM loan, why you would send me a full income, just those few examples there.
And Carla, when you're talking about the differences between the bankruptcy timeframes, what you're talking about are the prime and the super prime programs that we
Correct.
offer. Okay,
That is correct.
just for in case people have heard those terms.
No problem.
in-
So super prime is our better quality credit borrower for the non-QM, and prime is still good credit, but one, let's say, bump down for such as a recent credit event or limited trade lines or not out of the bankruptcy in the bankruptcy or foreclosure in the 2 year time period. That product allows for 1 year. So that's why we get a lot of regular traditional or good credit borrowers for alternative reasons. The next would be rolling right into our alternative income documents. Again, self-employed borrowers is the main target borrower that you are going after with your non-QM loans. So we will allow alternate income documents where now you are doing the complete opposite of the full income that we just discussed, where you're providing me tax returns, pay stubs, and W-2s. Here you now have a self-employed borrower who may obviously not be reporting all their income on their tax returns, or their tax returns show a loss. We can take documentation such as 12 to 24 months business bank statements, where we're looking at the business receivables, income coming in. We can take a P&L statement from a CPA, an accountant, or a licensed tax preparer that will show a bottom line number, and that's it, just a P&L, simple form on the accountant or CPA's letterhead with their license number. And we could do a VOE or a 1099. So sometimes, let's say like a stockbroker or a consultant, they are 1099 through some companies. We will allow the same company 1099 income. We use that to qualify. And or a VOE, which would come from similar type job that might be a 1099 customer or a borrower that receives cash or off the books income, or they get paid from a smaller mom pop organization who doesn't print ADP paychecks. We'll take just a VOE. That is allowed as well. And then last but not least would be our asset utilization, where this is utilized where people are heavy on liquid assets, but their income that's coming in monthly is minimal or less, or they're retired. So now they only have, let's say, $800 a month in retirement income. That wouldn't qualify for a loan. Again, we will take all their liquid assets, and liquid meaning they're able to go in and withdraw it tomorrow, stocks, bonds, savings account, checking account, retirement funds, IRAs, 401ks, anything that is liquid, we will look at and work up a calculation to help that borrower qualify for a mortgage with just their assets alone. So those are the 4 most popular products that we offer with the non-QM. Next would be residency, where if you're a foreign national or you're a non-permanent resident, we will lend to those borrowers as well. So non-permanent resident, they do need a social security number and a work visa. Foreign national does not need a social security number, does need a visa or proof of how they are legally here. But for the foreign national, just to keep in mind, this property we're lending on, again, is only an investment property. Whereas the non-permanent resident, it could be a primary residence. And also, I just want to touch back base with the income docs that I went over before, the VOE, the P&L, the bank statements, or asset utilization. They can all also be for primary residences. This is not strictly only investment properties. Obviously, your DSCR, where you're doing it just off the rent roll of the property, that is only allowed to be an investment property. And next would be a short-term bridge loan. That is our mini commercial, I like to call it, hard money, where it's, again, investment properties only. It could be multi-units, anything above 4 units. It could be a mixed use. It could be small commercial, warehouse, things of that nature. But also keep in mind, even in our super prime and prime, we can do mixed use properties on a case-by-case basis. So you should reach out to your account executive on that. And again, of course, case-by-case for the super prime and prime programs on that.
All right, great. So that's a good high level overview. Let's dig into the alternative document ones. Like you said, that's
Yep, let's
pretty
go a little
important for
deeper
those
into that.
particular groups. So let's look at those.
Okay, so our 1 year and 2 year P&L is just as it's stating. Now, what differentiates us from what we see out there? We know some companies might be offering this, but they want bank statements to back up the P&L. Where on us, we do not. So we could take a 1 year or a 2 year P&L directly from the CPA, accountant, or licensed tax preparer on their letterhead. And again, the bottom line number on that P&L is the number that we use to qualify. That's it. Nothing else needed. We can lend up to 85% on those if you're doing 2 years. If you're doing a 1 year, it is 80% max LTV. Purchase, refi, primary, or investment. The 12 or 24 months bank statements, just to touch on that. Business bank statements, we use 50% of deposits. That income is added up and calculated. And you can submit your bank statements to our concierge service, which is online on our homepage, so you can get back a calculation. Now, keep in mind, it's not an underwriting method. We do just have some clerical people there adding up your statements and calculating a number for you, so you have that document when you're submitting the file. The underwriter will double check it. And if you need, one of our advantages and unique niches here is that if you need more than 50% of the deposits to work your debt ratio on that file, you can provide a CPA expense letter. So, for example, if the CPA says John Smith's construction company has a expense of 20%, then we would use 80% of the deposits, opposed to the standard 50% where you don't need an expense letter, and so on. So if it goes even higher, that's okay. They have reviewed, I've seen it as high as 95%. We had somebody that was a realtor and didn't have business bank statements, but they went with the P&L to simplify it. And since it's a realtor, they don't work out of, they didn't own the company, they were a realtor. So they had limited expenses. So they were able to utilize 95% of the deposits opposed to the standard 50%.
Nice.
Okay. The asset utilization, here we go. This is where we're taking calculations of savings, checking, retirement, securities, stocks, bonds, anything that you have there liquid. We'll take that calculation and use the percentage and divide it by 60, and that will allow for your monthly income. And the amount of statements that we need for your asset utilization is 6 months. So we need to see the funds in there for 6 months, and we'll add up all the balances and divide by 60, and that will calculate your monthly income. Also, I wanted to mention to keep in mind with some of these programs, with pretty much with all of them, you can have one borrower that's asset utilization, and then the spouse per se, pay stubs and W-2s. Or you could do bank statements for one borrower, and then because he's self-employed, or him or her is self-employed, and then the co-borrower might be pay stub or W-2s. That's fine as well. But the program is always going to default to the non-QM product. So mixing and combining income is allowed in all our programs as well. So please keep that in mind, because that is a big deal saver, because sometimes their income ratio is not working now conventionally, but now they could put on their mom, dad, brother, sister, co-borrower on the deal that might be self-employed and fit these products and save the loan. So next is our VOE and 1099. Simple, just as it states. Last 2 years of the 1099 or last 2 years of a VOE, same company is where you have to be, is what is required. On the 1099, whatever the number is on the 1099, we use 75% of it. On the VOE, whatever income is stated on that VOE, we do use 100% of it. So that too is a big deal saver. 1099 is a borrower that, is technically self-employed, but doesn't always own the company. A VOE could be a salaried borrower that works in a smaller type company, or somebody that might get some cash tips or off the books income that we can utilize.
Great.
Again,
But before we go
Mm-hmm.
over to the residency programs, just a reminder to have people submit their questions again through the the chat functions or the comment features on social media platforms. So that's great. So let's go over to the residency and IO options that you had mentioned previously,
Sure.
and go in a little more depth there to see how we can help those
Okay.
people
So
who are
now,
not from this country originally.
so a foreign national full documentation is a CPA letter with year-to-date income on it. That's it. And whether it's overseas income or income here in American dollars in the States, it is fine. The biggest oxymoron, I might say, or just keep in mind, if you're a foreign national, the product we're doing here can only be an investment property, because you cannot have a primary residence and then be considered a foreign national. So if you're doing a full doc foreign national, it is just a CPA letter with year-to-date income on it overseas, wherever he is earning. If you're doing a DSCR, that's fine too for a foreign national. Then there's no income documentation at all. You're using just the rent schedule off off the appraisal, stating what the rent is versus the PITI on the property he's either refinancing or purchasing here in the States. So that could be your path of least resistance, that it's just either investment property with a rent schedule or investment property with a CPA letter for full income. And they do not need a social security number. Sometimes they do have one. So you're technically running it with 9999999. It should come up no credit. Sometimes one trade line pops up and a score. That's fine. You'll see on our rates and matrices, if there is a score, there's hits to the rate. If there's no score, the hits to the rate. And all of this too, you could put on our quick pricer. Don't forget on the homepage, which I think we have a slide for that coming up as well.
We do.
Next is the non-permanent resident. This is typically somebody who has a work visa or an EAD card or a Q10 ratings, C10 ratings. I've been being asked of recently. Again, if you look on our matrices, it'll list all the visas that are allowed, H1 and on their letters along the way. Can't get them all off the top of my head, but if you need our rate sheets after this call, you'll see that the visas that are acceptable. And then again, if it's a foreign national, then it's not a non-permanent resident. It's just the opposite of that. Next is our bridge loans. Kind of funny that we call it a bridge loan because it's not typically that, but it is a bridge loan in the sense of it's only a 5-year term. And then it is usually, it is a balloon due at the end. There is a prepayment penalty. It is for investment properties only. And again, that has its separate matrix in LTV. And it is for above 4-unit properties, mixed use, little semi-commercial, small commercial, case by case. So, and again, always on the bridge loans, only for investment properties. And all products, we can do interest only as well with your proper hit to the rate on that.
So that would be definitely fancy financing.
Yeah. Well, these are all the reasons why I came up with the fancy financing term, because learning it was definitely fancy.
All right. We've covered it, but we can go a little bit more again into the full doc non-QM, since that's
Sure.
sort of
That's fine.
the top of the waterfall.
Just to your debt ratio is 50 on it. Again, it's a CPA letter with year-to-date income on it. Loan amounts can go up to 3.2 million. Cash out is allowed as well. Usually up to $1 million to $2 million cash in pocket. Otherwise, we can make exceptions case by case. So you can always check with us on that. We have 30 and 40-year fixed. If you're doing the 40-year fixed, you can have the first 10 years interest only, or it could be a straight 40-year. Traditional income is acceptable as well if it's here in the States. And we do allow for 2-year credit events. So again, the reasons why you're doing a full doc non-QM with us is because of maybe the time period and thresholds that Fannie and Freddie require for you to be out of a bankruptcy, 7 and 4 years. Here, we're only at 2 years. And the condos and condotels we could do non-warrantable condos as well, but it'll be at reduced LTVs and depending on the state where they're in. That's really
so here's a good question that I'm sure will come up, but since we have very high thresholds on most of the non-QM, loan amounts above $1 million, most of the conforming amounts, When would you steer them towards a jumbo loan versus a higher balance non-QM loan?
Um, Many times I don't, because the pricing today in this market with all the rate increases recently, the
Hmm.
non-QM pricing is better. And today we did just reduce our non-QM rates again. So I would always shop and compare, but
Hmm.
the conventional pricing on high balance loans in the broker community, the rates are not far off. They're definitely in the upper fives, lower sixes. So if you're doing a non-QM and it's a strong borrower, you're going to get a pretty similar and also a path of least resistance, because the difference with
True.
the prime jumbo is we're bound to that AUS, or we're bound to that LP, which we're going to be stuck to those Fannie Mae guidelines where there's not a lot of flexibility. We can't control it. Here, we manually underwrite all the non-QM, so there's flexibility in them, and it allows the deals to go through quicker and faster as well.
Good question that came in. Okay, next up, we're going to talk about. I know it's your favorite one to talk about. DSCRs.
Here we go. So simple as it states, we can go up to 80% on a DSCR product, which is in a debt service coverage ratio, and it is only for investment properties. And we go up to 1 to 4, we will do 1 to 4 families on these investment properties. So whatever the appraiser states to be the market rents, that it comes back on the 1007 rent schedule, that's what we use to qualify the borrower. So it's your rent versus your pity. So just to water it down, if your pity on the property is $100, you just got to be sure and hope that the appraisal comes back, the 1007 rent schedule comes back with stating the market rent for that area is at least $100, and you'll be good to go. Now, please keep in mind, if the rent doesn't cover, we still lend on that borrower, and we can do that, but then you're capped at 70 LTV, and there is a hit to the rate. So that will change your program once the appraisal comes in. So be mindful of that, please. Again, 40 and 30-year fixed. You can do cash out refis. Loan amounts can go as high as 2.5 million. Have seen higher as well. One of the requirements is that the borrower does own any property, or they have owned any property in the last 24 months. So even if they sold one, or they just sold a primary residence, or they currently own another property, it doesn't have to be a primary. Even if it's an investment, we are good to go with this program. Condo tells allowed as well. I've seen a few mixed use in this program also, just closed recently. So flexibility there. Always ask.
Flexible and fancy.
Yeah, I like it.
Yeah. Now, I'm sure there are going to be new brokers who are watching us who maybe don't even know non-QM. So let's step back a second and explain to people what DSCR is, because I know there's a lot of confusion that there are people.
DSCR stands for debt service coverage ratio. So what that means is it's a investment property that you're purchasing, and the rents are going to cover the pity. So it's for investment purposes only. And it's just that nobody's normally buying an investment property that doesn't cover itself for you to in turn earn a profit. Again, sometimes the rents for the area come in lower, but the intention of the buyer is always to rent it for more. So they'll lend on it knowing that the homeowner of this property now is going to look to lease it out for more than his pity payment is on the property.
Okay. And for those that don't know what pity is, it's principal, interest, taxes, insurance.
Sorry.
Well, again, there may be new brokers. When I first got into this industry, I often thought it was alphabet soup with all the different acronyms. So
Right.
I always try to boil it down so that it's understandable even for potentially new people. And
Understood.
that's one of the benefits of these webinars, is we're talking to both new and experienced brokers. So it's a good
You
education.
learn something new every day. I'm doing this over 30 years, and I'm still learning something new today. So
But
you
you
never know it all, because
but,
it's forever changing and evolving as well.
but you still look 25.
Yeah, thanks.
So, all right. So we've talked about DSCR. So who are the likely target buyer or borrowers for this?
I would say foreign nationals, because obviously it has to be an investment property. Investors, people that are looking to increase their investment portfolio, purchase investment properties to earn a profit.
Mhm.
It pretty much could be anybody. Sometimes there's a little hesitation on somebody wanting to purchase an investment property because they're unsure of to being able to qualify for the mortgage based on other mortgages that they have or other debt that they may hold.
Mhm.
Keep in mind this product also a very important feature is that there's no debt ratio calculated, there's no income put on the application, and the entire loan is just based off the property that we're lending on. Investment business purpose only loan. So it is that simple. It does state here, first-time home buyers. We have been making exceptions case by case. So keep that in mind, especially out of state. Somebody's living and working, somewhere in New York, but they're purchasing a property in Connecticut per se. We're okay.
Mm. So it's
So
good
it's
for people
case
living
by case on the
close
first-time
to
home buyer.
good for people who live on the border of other states.
Correct.
Okay. And obviously, we're going to talk about the benefits of DSCR,
Which is what I just kind of
Yeah.
summed up and said, and I kind of speak before the slides come, but there's no income on the application, no employment is needed, no leases are required. Again, everything is just off the rent schedule that the appraiser states. Again, where there is flexibility, whereas if the rent comes in lower, but they're able to provide a lease already that they're going to be collecting this rent from this borrower once they own the property, then we can get the debt service ratio cover up and it wouldn't have to be an exception.
Mm.
That's pretty much, that's simple of it. Refis, purchases can go again 1 to 4 families at 80%.
All right. I know you put together a couple of loan scenarios for a couple of the different products we've talked about that we could take a look at here. So let me jump over to those. I know you had one, I think was, the first one was for bank statement option.
Okay. And this is for, let's say, a commercial developer that's looking, again, doesn't report all their income. So they cannot provide their tax returns, or they own multiple properties and might have a 100-page tax return. If you provide business bank statements for one of his businesses, we use the business receivables, which are the deposits, to calculate his debt ratio on that loan, and we go to 50% of it. Cash out up to $2 million. We can lend up to 85% on the bank statement program with a debt ratio of 50%. If it's a primary residence, your debt ratio can go as high as 55%. That's really about it. I feel like I've been repeating that.
No,
Does anybody, and just jumping to the profit and loss, thank you, Carl. This is a self-employed borrower as well. Keep in mind the business bank statements, the profit and loss, most of this alternative documentation that we allow are for self-employed borrowers. So the benefit with our P&L is that we do not require bank statements to back up the income on the P&L. We could take a 1 year for 80% LTV, or we can go a 2 year for 85%. And again, it's based on the last most recent 12 or 24 months. So from today back. So we're in September, would be August 2022, back 1 or 2 years, with the bottom line number that's used to qualify. And again, primary residence can go up to 55 DTI, standard guidelines 50. If it's an investment property, it's a 50 DTI as well. But we have that flexibility with the little higher DTI if needed.
Yeah, one DSCR. I know you love your DSCRs.
This one is for a U.S. citizen that has several investment properties, one in Florida, some are free and clear. The credit score is 758. He files tax returns that aforementioned might have a loss. We can go up to 75% LTV as a cash out refinance on this property.
All right. So if we can do some wrap up here.
What can I say?
Thoughts.
I could say I'm repeating myself often, but this is fancy financing in a nutshell. Any self-employed borrower, please reach out to them, or people that, you're just in your daily walks of life and you're having conversations. They'll say, oh, I can't qualify for a mortgage. Once you're talking to your little local cafe or your dry cleaner and all, and they say, why? Usually it's because they think they don't file all their income. That's where you have to open up and talk. So anybody who's self-employed, somebody who's looking to purchase investment properties, people that might have limited trade lines or just don't have that standard documentation, keep in mind they can fit into our non-QM mortgages. But please don't hesitate to reach out to your account executive, whether it's me or 25, 30 of the other lovely ones throughout our company and ask your questions, because it's all about scenarios and what we could do. And they will definitely help you structure those loans. And keep in mind, both borrowers don't have to be non-QM. You may have a borrower that's going, or loans that are going conventional, and they're falling out because the debt ratio doesn't qualify. They can add a borrower with this alternative income and save your deal. So you can mix income on our files.
So it's all about flexibility.
Yep.
So,
It's a very simple process. It's much less documentation than traditional financing. So keep that in mind. Some people are afraid of it, but if you present it properly, you submit it properly, you're going to close your loans in less than 30 days.
I was about to ask, how does that compare to conventional loans?
Yeah, conventional, again, is taking its time. It's slowed down a little too because of the rates. So the interest is swayed over to all the non-QM these days because it's popular, and people are trying to go in a different route to create pipelines and drum up business. And this is definitely one of them.
Right. All right. Well, thank you, Carla. Let me
My pleasure.
turn over to a couple of questions that I saw pop up while we were talking. When you were discussing the foreign national program, question popped up about whether the borrower needs to be within the country at the time of the closing. Can they
No,
go to
they
an embassy?
can close overseas. We just have to have it approved prior, and it's usually at a local embassy there, and they do it with what's called a RON, remote online notary. So it
Got
is possible they can close overseas, again, at local embassies, or the like, where there's a notary. So that all does just have to be pre-approved before your file is clear to close and during the process, just to make sure it's okay. If not, then they do have to fly in for it.
Okay, great. And we do have a bit more information on the whole foreign national program.
Yeah.
Expanded a little bit more than what Carl has been discussing in a previous webinar we did. Actually, it was last week. So they can go check those recordings out either on some of the earlier posts on our social media pages or over on the Learning Center, which I'll talk about a bit in just a minute. Let's see. I don't see any other questions. So let me go to the wrap-up slides. We'll give people a few more minutes to put their questions and thoughts together. So as Carla mentioned, we do have a few technology tools that can make the brokers' lives easier. First and foremost is the Quick Pricer. We're not going to demonstrate that. We've done that quite a few times. But
quickly, just for me to mention, it is on our homepage. So you don't even have to log into the portal or need a set of credentials. You can put your loan scenarios in there, type in your LTV, your credit score, your loan amount. You could change your income documents back and forth, and it'll keep popping up. It's very user-friendly and very simple to work with. You'll love it.
Everything is built on a slider,
or they can even type it in if the slider doesn't go, because it's hard to punch in that loan amount.
Yep. So it's easy and you can do it both on the desktop and you can do it from your phone. So
correct.
We've made it extremely user friendly. If you do have loans with us, they're obviously all going to need an appraisal, which you can manage through the appraisal center. We have, I believe it's now over 20 AMCs that are approved. So you can manage up to 20 appraisals on a single loan if you're really that crazy to do it.
No, what you could do, just be sure you do need separate credentials from our portal to the appraisal center. So there is, if you click on you're going to admortgage.com, you'll see the appraisal center come up, go there. There's the email address where you can request your credentials for that. Once your loan is submitted to us and our disclosures go out and the borrower acknowledges the disclosures, you can then go ahead and order your appraisal by picking from one of our 15 to 20 AMCs, as Carl had just said. On there.
And we
keep adding to them. We keep adding to the center. To satisfy all.
And we've got a number. We've done one or two webinars on how to use the appraisal center. So, and if you've got questions, the broker support team can always definitely help you for sure. And our third platform that we like to really tout is AD Studio. That's our web-based online marketing platform. Functions very similar to Canva if anyone's used an online marketing platform. There's a wide range of templates for social media, flyers, emails. Brokers have the flexibility of branding it either for themselves or they can co-brand. So they'll just fill out their profile, upload their pictures, their logos, their color schemes, and then pick a template. It'll automatically load that information into specific populated areas, and then they can swap out some text, swap out some pictures, and be ready to go. It takes 5 minutes to do, and it looks really quite good. We're always adding new templates every week, so there's always some variety that and expanding any ideas that they may bring to us. If there's some presentation or something that we haven't thought of that they might want a template for, they can submit those ideas to us.
Great.
Again, we do the weekly webinar series. So over the next couple of weeks, we'll be doing something in depth next week on our jumbo and prime jumbo programs. We'll look again at the self-employed borrowers, but from a different angle, the week of the 20th. For those people who might be interested in getting into correspondent lending, we'll have one of our correspondent folks on to explain what correspondent lending is, what some of the advantages are. And then for people who may be existing NAM members, Carl and I will be doing a variation of this. We call it our overview of AD Mortgage's loan solution. So if you need a refresher, and you're a NAM member, you should be getting some promotional materials for that pretty soon. So again, that's just a couple weeks away. You can tune in for the Carl and Carla show.
I like it.
Ladies first, Carla and Carl show. And then again, we record all of these webinars. Since we've gone to live streaming, it will record and post automatically on both YouTube, Facebook, and I believe LinkedIn as well. Otherwise, we will be uploading a video to our own YouTube channels within 24 hours, and we also post it over on the website on the AD Learning Center, which is available under the resources drop down from our homepage. And most of the things that Carla has mentioned, let me just pop it up really quick over here. All of them are available right from our homepage. So the Quick Pricer, AD Studio, Appraisal Center. We didn't talk about the automated decision manager, but that's for our broker partners where they would log in here. And then I haven't talked about Telegram, or sorry, our AD News chat bot, which is available here as well. Not as critical to cover that at the moment. But we are fairly well engaged in social media, Facebook, LinkedIn, YouTube. And again, so AD News chat it's a combination of a bot and news channel on an app called Telegram. You can download Telegram from Google Play or the App Store, subscribe to us by going to the @ADMortgage_bot, and then most everything that you would want to know or have questions about is available pretty much at the click of a button through the chat bot. You can get our rates, you can get our programs pages, you can access most of the platforms that we've talked about. So it's a handy device to stay in touch with us. Plus, it's a good way to. It's a very secure channel, a little more secure than WhatsApp, and you can communicate again with your AEs through that through that channel. And then the last thing is NonQM Exchange, which is a forum group that we moderate over on Facebook. And it's a platform. It's basically another online community where brokers can talk about things happening in the industry. They can post loan scenarios that, we monitor it pretty regularly throughout the course of the day. So if you've got a question and, for some reason you can't reach your AE, or you can't remember who your AE is, you can't get in touch with us, you can post it over there. We have people scouring it. So we find that scenario and be able to answer it for you. So it's a good tool for people to stay engaged with AD Mortgage on a regular basis. And if you're not an existing broker with us, again, you can go over to the partner, the Join Now button, and become a partner. If you're lucky, you'll get Carla as your assigned account executive, and your life will be golden for the rest of your
You
life.
can request me.
But we've got a large team of highly responsive account executives that know the non-QM industry inside and out, as well as conventional government loans, which we do as well. But again, our primary core strength is non-QM. We do it all day long. Eat, breathe, and sleep it. Um, so with that, I don't see any other questions. But
Okay.
Carla, what are just well, we can close that with. So what are the most common questions that you typically are getting about non-QM?
What are your rates? Your LTVs pretty standard. What are your niche products? I have a self-employed borrower, which is the best program to put them in.
Mm-hmm.
And the DSCR is definitely the most popular today. Seems everybody's running out to purchase investment properties. So
Yeah.
nothing really out of the ordinary. It's
Okay.
just if you're unsure, check with us. Give us a call. We'll get it. And if we can't do it, there is a lot of loans that we can't do.
All right. Great. Well, with that, we'll close out. I'm going to thank Carla for taking her time and putting together a great
My
presentation
pleasure.
for us. As always, being informative and being fancy. We just
Thank
love
you,
her being
everybody.
fancy. And with that, I'll go ahead and close out today's stream. Thank you again. Be sure to like, subscribe, and whatever other methods there
See you
are of
soon
following
and
the
look forward to
social
hearing from you.
platforms.
Thanks
So,
again for listening.
yep.
Power of yes.
Yes. And I'll post up a survey for those people that want to give us
Great.
some feedback, and I'll put Carla's email address in case anyone has scenarios that may want to reach out to her and start the process of becoming a broker with us. So thank you, everyone.
Thank you. Have a great day.
Bye.